Good morning, or should I say mid-morning. Jeffrey Friedman, Senior Commodity Broker, RJO Futures. Would like to give you some stock index comments on today's activity. But before we talk about today's activity, let's get a little review. Let's look at the forest before we look at the tree or the bark of the tree. The forest is that we were at 1,400 in the S&P future contract only about a month and a half ago. We were up about 12% in the stock index futures in general, NASDAQ, Dow, and the S&P. The month of May, sell in May and go away, worked out like a champ. And what does that mean? We're down 7% on the last day of May for the month. We are down again today about 11 points in the S&P, even though yesterday was a big down day for all the stock indexes, and we have had a lot of liquidation or price moving down in all outside markets. The dollar is very strong, and the treasuries are very strong. The reason I bring it up in relationship to the stock market index futures is because there's a safety situation going on. Everybody is running to safety nets. Japanese yen, treasury bonds, the US dollar, those represent your safe havens, and they are liquidating any risky assets. Again, we are down about 7%. We are still above this year's low. The low in the S&P in the June contract was 1290 approximately. We are around 1300. We might be at 1298 at this one moment. We were up a little better after being down almost 20 full points yesterday, and now we moved back down. What do we have on the docket? We did have a lot of economic reports, but just so you know, the word of the day is still Europe and Greece and Spain and possibly other spreading to other countries. But have said that, let's take a look at the economics of the United States. We had ADP, which is front-running our unemployment non-farm payroll, okay, and that was slightly disappointing, but the market still stayed slightly above. S&Ps were still 3 to 4 points above after that release. What else did we get? We got initial claims, another disappointing situation. We got 383, we were looking for 368, so obviously unemployment claims, people needing assistance, was larger than we wanted. Looking at the GDP revised division, it came in line at 1.9, but nothing to brag about. 3, 4, 5 months ago, we were looking for 2.2, 2.4. So obviously people are bringing their estimates down, and that gives way to the thought that possibly another recession is coming. Maybe not in this quarter, but down the road, depending on how severe Europe is. And we haven't even talked about China with the slowing effect. Will it be a hard landing or a soft landing? They're taking measures in China right now to try to stimulate, so that means that they're slightly concerned as well. What's the trend on a technical point of view? Those were all the fundamentals. Now, what did move the market going lower from positive to negative today alone, looking at the bark of the tree, was, in my opinion, we went from positive to negative in a very short period of time, and that was the Chicago PMI, which is a manufacturer in the Midwest. And that was the straw that broke the camel back on a day-to-day basis for today. Looking at a technical point of view, I see support on my charts around 1290. We're around 1299, and if we get down there, possibly we could hold and bounce. We've bounced before. Remember, if we close under 1320, again, that is not a positive sign. The bears are definitely in control of this marketplace on a technical point of view. You would need the marketplace in the June contract of the S&P to close above 1325 on a closing basis, possibly 2 days in a row, to change any kind of momentum at all. Remember, that would be very possible in a very quick motion if we got any good signs out of Europe. That is the dominating force regardless of our situation here. One quick note though, tomorrow is non-farm payroll, and that is our biggest report in the United States for our economic growth. Remember, we need job creation. Remember always, trading futures and option to futures involves risk of loss and is not suitable for all investors or traders. I recommend that you call me for entry and exit levels and any strategies you'd like to implement or kick around with me. And please call me at 800-826-4124. And I'll leave you with good luck and good trading.